Broadcom stock destroyed the S&P last year. Is it now overvalued? Broadcom, as you may or may not know, is a leader in semiconductor development. They also sell software to companies and other cloud providers. This has helped the business have amazing growth rates. Broadcom stock over the last year has shot up around 64% and is now trading at around $315. So even with this massive bull run the stock has had, is it still worth buying, or is it leaning into overvaluation? Broadcom currently has a PE of around 44 and a forward PE of around 38, which are both premiums compared to the S&P and the sector median. Now, the company has backed up this premium with insane revenue growth, with it being 25% year over year and expected to be 45% over the year according to Stoxk Anaysis. Also, this chart shows the incredible growth in revenue, gross income and operating income. It shows us being able to grow at amazing rates, with revenue going from 13 billion in 2016 to about 68 billion today. Even operating income went from negative in 2016 to 27 billion today, with half their EBIT coming from their semiconductor segment, along with half coming from their software infrastructure segment. Even though the software segment has half as much revenue as the semiconductor segment, it makes about the same in operating income. Now, all this seems great, but there is some concerns, like the hesitance from investor when it comes to anything software related. But I feel Broadcom isn't as affected as, say, a software company like Adobe. But with geopolitical tensions and concerns around semiconductor and AI cloud, this could greatly affect Broadcom, along with the bulk of their chips being sold from a small amount of AI customers. Their segment, especially their software segment, I think are very important and give Broadcom high switching costs. Also, this is the reason why they have such high margins. Management of Broadcom say they want to grow AI infrastructure, which they say will be a big part of the future for Broadcom. Along with that, they're pushing their VMware business, expanding it and making it the ideal option. They also are sticking to big customers and not smaller customers, as they feel customers could use that and threaten them. Broadcom also does pay a dividend, and as a dividend investor or investor that loves dividends, I always like to look to see if it's good. As shown here, Broadcom have incredibly been consistent when it came to their dividends, growing it from 18 to 260 in less than 10 years. Currently, they have dividend growth of around 10% and a pretty low payout of 48%, with 16 years of consecutive dividend growth, which isn't too bad. And if demand for AI continues to grow, not many other companies try to design their chips similar to Broadcom. Along with their VM product being expanded, this could all give Broadcom a really big and significant moat. Even down the line, they could eventually offer their VMware to smaller businesses and self-employed people. So in my opinion, I think Broadcom is a very good business that also has a ton of potential for growth. They also have the choice to develop which segment, whether it's their chips and their semiconductors and that, or if it's their software business, like their VMware, and if they decide to develop on that. If they do, that could lead to them making a bunch of cash down the line. Even now, the cash they generate can lead to share buybacks, dividend increases, or even investing back into the business itself. But there is obvious concerns, and right now I feel Broadcom is a stock I'll be waiting to see what happens. Just with the overall market and any geopolitical challenges we face in the future, I'd rather wait and see what happens. But as always, what are your thoughts? Is Broadcom worth investing now, or is it overvalued? Or is it worth just DCAing or dollar cost averaging into our funds? Comment below what you think. And also, if you've made it this far, don't forget to like and follow. It really means a lot to me. And thank you so much for watching. Slán.